While many investors are thrilled about holding shares in tiny, fast-growing firms, others prefer the equities of established household names that give a feeling of stability and security. Even the most successful investors, however, sometimes ignore a large segment of the stock market, mid-cap equities. Welcome back, everyone. Today we'll be going through the analysis of mid-cap stocks. So let's get started. What exactly are mid-cap stocks? Mid-cap is a word that covers firms and equities that lie between the large cap and small cap categories. The categorizations of a company's stock is determined by its market capitalization. This categorization is changeable and can be shifted in response to changes in a company's market worth. Market capitalization is calculated using a company's active number of shares and the value of an individual stock. Understanding mid-cap: when a corporation requires cash, it can do it in two ways: through a loan or through stock. Debt must be repaid, but it's simply more affordable to borrow than equity due to its tax advantages. Although equity is more expensive, it does not have to be repaid during a crisis. As a result, businesses try to have a healthy balance of debt and equity. A company's capital structure refers to the balance. The capital structure of a firm, particularly its equity capital structure, may reveal a lot to its investors about its growth potential. One way to learn about a company's capital structure and market depth is to calculate its market value. The market worth of look-up firms is $2 billion or less. Businesses with a market of capitalization more than $10 billion are capitalized as large capitalizations, whereas firms with a market capitalization of $2 billion to $10 billion are capitalized as mid-capitalization. For clarification, new market capitalizations, categories such as mega cap over $200 billion, micro cap $50 million to $500 million, and nano cap less than $50 million, have been added to the brand. A mid-cap business may be interesting to investors since earnings, market share, and productivity are projected to expand. They're in the middle of the growth curve. They're less hazardous than small caps, but riskier than large caps because they are still regarded to be in the development stage. Companies with a high market capitalization, mostly due to a growth in share of prices, run the risk of no longer being classified as mid-cap. What are mid-cap characteristics? So the most important characteristics of these stocks are explored further below. Diversity. Mid-cap equities are located on a broad range, bordering some small caps and large cap firms. The rewards and risks associated with these shares differ. Some mid-cap firms may be reaching the development stage and therefore provide higher stability rather than return. Conversely, some companies may have recently graduated from a small cap and thus enable greater returns in comparison due to its stability. Growth potential. One of the most tempting aspects of these stocks owned by mid-cap firms in India is their strong potential to improve profitability, productivity, and market share. During a bullish market or a market growth, investors may anticipate such firms to become an overnight success, dramatically increasing their profits. Moderate risk. When compared to small cap companies, these equities react to market volatility with less strength. However, as compared to large cap companies, they provide less stability during market contractions or bad markets. Mid-cap stocks are more liquid than small cap equities. Firms with such stocks are well known and investors may place their faith into their shares. As a result, it is simpler to locate purchasers at a reasonable price during a sale. Why invest in mid-cap stocks? Mid-cap companies have outperformed both large cap and small cap equities over the past few years. They have been the favorite of seasoned investors because their excellent position in the stock market allows them to utilize the best of both ends, i.e. risk management and large profits. They contribute to diversification and the portfolio of investments, including them in your portfolio. It offers several advantages, which are more explored down below. Ease of growing. Mid-cap firms in India have a greater opportunity to raise money through credit than small-cap enterprises, boosting their potential for development and expansions. Return policy. Because most mid-cap firms are located in the center of the growth curve, they have an opportunity for value gain, as well as the ability to pay out large dividends. Less examined. Most mid-cap stocks are not extensively scrutinized, resulting in the little interest from major institutions and seasoned investors. It leads to lower costs, making it more economical to incorporate into your portfolio. If you can accurately predict which stock from a mid-cap stocks will receive more scrutiny and attention in the future, and invest heavily into those funds, you may earn significant profits. Considerable information. Unlike small cap firms, the stock gives significant information about their financial health and history. This simplifies the analysis of a business from a list of mid-cap stocks. As a result, you may effectively conclude on their development potential and profitability in order to make an educated investment selection. Consider these 5 outstanding mid-cap stocks and ETFs. Don't be shocked if you don't recognize the names of all these mid-cap stocks that we've highlighted. Some mid-cap stocks are well known, but many are not, particularly those specialized in sectors. Here are some great mid-cap stocks. Umbrella, otherwise known as AMBA on Nasdaq. Umbrella is a tiny business in a sector dominated by powerful semiconductors or computer chips. Umbrella is not a chip maker, rather it designs components that are subsequently produced by its chip manufacturing partners. Umbrella specializes in computer vision semiconductors, which employ artificial intelligence. It assists a computer system in seeing, reorganizing what is in its field of vision, and making judgment calls. Security cameras and driverless cars are some examples of this application, with the latter anticipation may be to massive growth in the industry in the incoming decades. Clover Health Investments. Clover Health Investments is a rapidly expanding healthcare insurance firm. It went public in January 2021 after a merger with a special purpose acquisition company headed by Chamath Palihapitiya, a former Facebook executive turned venture capitalist. Clover is now a Medicare Advantage insurance business with a twist. Its software connects directly with operations of healthcare providers, removing the layers of bureaucracy that have historically plagued the healthcare programs. Although not currently profitable, the firm is on a clear road to being successful and has the potential to significantly disrupt the huge healthcare sector. Next up, we have Stitch Fix. Stitch Fix is an excellent example of a new growing company that is no longer considered to be small cap, but it is still in its early stages of producing a positive free cash flow. The online firm sells and distributes selected clothes and accessories to its members, utilizing artificial intelligence to improve the sales and match customers' taste with the company selections. While the textile and apparel industries suffered as a result of the epidemic, Stitch Fix defied the odds and continued to expand. It is subsequently reinvesting to increase the rate of growth and benefiting from a spike in buyers spending on clothing. Vanguard Midcap ETF. This ETF tracks the performance of CRSP US Midcap Index. This portfolio, which includes 349 equities, invests in both growth and value firms. It provides a modest dividend and is reasonably priced with an expense ratio. The fund's annual management charge is only 0.04%. iShares S&P Midcap 400. This fund focuses on midcap growth equities. Investment in ETF are made in a portfolio of 220 US stocks with high ground potential but volatile stock values with annual expense ratios of 0.17%. This ETF is a new low-cost alternative. What are the drawbacks of mid-cap stocks? In most situations, a company's graduation from mid-cap assets to increasing profitability and productivity until it reaches the large-cap tier, boosting both the components of returns, dividends, and value appreciation. This is criterion, however, may not apply to all companies in India that are part of the mid-cap index. Among the threats connected with these stocks are the following. Value trap. A value trap occurs when the firm continually runs in low profitability with low cash flow and is unable to break out of the phase. Mid-cap firms, particularly those with poorer rankings, are vulnerable to value traps and may even go bankrupt if the trend keeps going. Inadequate resources. Mid-cap firms are more likely to have inefficient managerial and organizational infrastructure than large-cap enterprises. As a result, even if they earn profits and attract value appreciation, they may not be able to be equipped with the same effectivity. The impact of a financial bubble. An extraordinary performance by mid-cap business may be the outcome of a self-sustainable financial bubble. Most of these businesses, however, lack the financial strength to survive when the bubble bursts. As a result, when searching for the finest mid-cap stocks, be sure to analyze their financial history prior to the bubble in order to correctly evaluate their financial endurance. If you have a high risk tolerance, you may want to invest in the finest mid-cap stocks. Investors who are lacking or experiencing the mid-cap equities may want to invest in mid-cap mutual funds. According to SEBI, mid-cap mutual funds may invest at least 65% of their assets in mid-cap quantities. They have historically outperformed large-cap mutual funds. Finally, every investor should base their investing selections on their risk tolerance and financial goals. Mid-cap equities should only be purchased by individuals with high risk tolerance and a lengthy time horizon. In the near term, equities are quite volatile. Before investing, conduct a due diligence by reviewing a company's financial statements and financial statistics. Annual reports may teach you a lot about a firm. Investors who like to invest small sums of money in mid-cap stocks on a regular basis can instead use a systematic investment plan to decrease their overall risks. Are you unsure about the specific mid-cap stocks or stock to choose? A mid-cap exchange-traded fund, ETF, can help you diversify your portfolio by offering exposure to a diverse selection of mid-cap equities. What accounts for the mid-cap stock outperformance? Mutual fund investments susceptible to market risk? Comment on all of these in the comment section down below. Thanks for watching. Bye-bye.